I'm Victoria, and today I'm sitting down with Alec Abraham, Senior Equity Analyst at Sasin Bank. We will be going through Mr. Price's latest earnings results. On the face of it, it seems to be quite a good result, led by CEO Mark Blair. Alec, what are your thoughts about the results from Mr. Price?
As you said, they are quite good results. I must say one thing, though. It's very difficult with all of the disruptions we've seen in South Africa, with the floods, with the riots, with the pandemic, and various closures. It is difficult to look through the noise of the results. So, us analysts have our work cut out for us this time around. But having said that, I think on a comparable 52-week basis, earnings up 25%. Which I thought was a good result. What's particularly good is they gained market share, and also management have been very good at keeping costs low, and that's where they shone again.
Okay, and what in the earnings results, they said that they may have some supply issues that may come through and that they're facing at the moment. What are your thoughts on that?
Well, unavoidable. With the constraints that we are seeing with the lockdowns in China, it is unavoidable and simply has to be managed by the businesses. So what you have been seeing is a number of the retailers probably having slightly higher stock levels than they would necessarily have normally have had, just to try and account for potential disruptions.
Okay, and online sales, I read they're up 48%, but still only 3% of total retail sales. What are your thoughts?
Well, what we are seeing is definitely a pickup in the number of people shopping online. It's certainly the direction that we're moving into. Mm-hmm. But I think what is very important in the South African context, at least, is the omni-channel approach. I think if you look at their online sales, the majority of those are picked up in store. So I think in South Africa, you have to have an online presence, one, so that you also have a 24-hour shop front. Yes. If you don't have and your competitors do, you're going to be left in the lurch. But I think, as I mentioned, very important to have that omni-channel approach.
Okay. And then looking at credit demand, which remains strong with account applications up 54%, can you speak to the outlook of their target consumer?
Look, I've always been a half-empty kind of guy. If you look at really the drivers of creating wealth in South Africa, they're not very strong. We still haven't recovered all of the jobs that we lost during the pandemic. And unfortunately, GDP growth is just too low to create sustainable wealth within within South African consumers. So that is a little bit of an issue. With the increase in interest rates and the increase in living expenses that we're seeing, I expect that there will be some deterioration in the credit quality. But Mr. Price have never been a credit business. They've always focused on cash, and that's still the mainstay.
Okay, and then with a healthy cash balance of 4.6 billion, do you think they will look to make more acquisitions like Yappy Chef or Power Fashion?
Well, Studio 88 will eat up about 3.3 billion of that cash. Okay. So that is the new acquisition. I don't believe it has been approved yet. Okay. But it's a very interesting move. It's quite interesting how Mr. Price have developed their strategy, choosing to remain focused on South Africa and broaden their reach within the retail environment. I think the Studio 88 acquisition is quite a good acquisition in the sense that it brings in more exposure to the aspirational side of the market. Okay. It is branded athleisure. where Mr. Price Sport is really a home brand, private label brand. So it does bring that appeal of the brand. It also brings a little bit more complexity to the business.
Okay.
And also in a lot of ways takes them head on with some of the other retailers that they haven't been competing with head on. It brings them head on against Sport Scene from Foschini. So it does bring complexity in the business, but it does also broaden the market. Wow. So that, like I said, that'll be a big chunk of that cash taken up by Studio 88.
And could you speak to what you think of the latest acquisitions of Yuppie Chef and Power Fashion? Are you positive about them?
Yeah, I am positive about them. I think particularly the Yuppie Chef and also Studio 88, because, I've had this debate with the management of Mr. Price, but I think that through the years, they've actually diluted their exposure to the upper end customer. As they've tried to broaden their market, I think they've moved to sort of a more of a middle class kind of market. And I think that was a bit of a loss. So by including something like a Yuppie Chef, they gain a little bit more exposure to the upper income groups, which at the end of the day are more resilient. They're not a very big growth sector, but they are more resilient particularly when times are tough. Power Fashion, obviously, on the budget side, will give them a fuller exposure there. So I think that overall, the strategy of making these acquisitions and increasing their penetration of the South African retail market is a plausible strategy, and I think will give them some margin growth opportunity as they incorporate these businesses into the Mr. Price Group. But I still maintain, though, that in the medium term, growth is going to be capped. When they run out of acquisition opportunities, and you're relying on real volume growth and consumer wealth to drive your growth, I feel that in some ways they're painting themselves into a corner a little bit, being focused only in South Africa with a fairly mediocre outlook for the country.
Yes. What are you looking forward to seeing unfold within Mr. Price in the next financial year?
Expecting a fairly good result. I think they'll probably do about 14-15% growth in earnings next year. You've got some of the businesses that weren't in for the full year last year that will be in for the full year this year. And also you've still got some disruption from last year. So you should see a fairly good performance coming this year, if not only for those base effects, but a fairly good good growth. I think, like I said, expect some margin improvement from the businesses that they've acquired. So it should be quite a good year ahead. But like I said, medium term, that sort of becomes a different story unless we can significantly pick up the GDP growth in South Africa. And unfortunately, the outlook for that, I think, is very, very poor.